DailyFX BYOA contest for week 21. That's the trading week of August 14th to August 19th, 2011. Pair I'm looking at right now is the Kiwi dollar on the 4-hour time frame. As you can see, towards the end of last week, we had a little bit of correction from the low we made at 79.7, or around the 81 handles where we hit some pretty solid resistance, and now we're moving back upward. In my opinion, I think we're going to move up towards maybe the 84 handle or the 85 handle before we'll see any continued selling pressure. Now, for me, as a long-term investor, I'm looking at this from a longer-term view than maybe some other traders would be looking at this. Okay, so there is some money in the trade right now that is pushing this higher. We did have a little bit of bounce and risk. But for me as an investor, as a long-term investor, I just don't see this risk-on move as having too much carryover in the coming weeks. I'll get to the fundamentals in a second, but let's just talk about the technicals real quick. For me, I'm looking at the retracement levels here. I'm looking at the 50% level and the 61.8 level, which also match up with swing lows that we've had recently in the middle of July, towards the end of July. This is giving us a little bit of confluence, right? Because we're getting a retracement level that matches a horizontal level that we have drawn from a previous swing low, and it's giving these levels a little bit more resistance. So as you can see here, we had a bit of a retracement here at the 50% level. That was on the 9th of August, so we did hit that 50% level, dropped drastically back down towards the 81 level. So we do know the 50% level has shown us a little bit of resistance. From a technical standpoint, that's about all I'm really looking at right now because I just don't see much to look at. If you want to get a closer look at it, you can kind of see here that it is possible that we may hit the 84 level, 84.4 level, and may see some continued selling pressure there. But that's about it really from the technical standpoint. Moving over to the fundamentals, really what I think you're looking at here is you're really just looking at a couple of things. Number one, we've got numerous countries around the world entering into a bear market. We're seeing some major contraction in the world, and this is being reflected in fundamental data coming out. Now, a quick view at the daily FX calendar for this week, and we're seeing a lot of expectations for contraction. I think Japan, the Eurozone, Germany in particular, we're seeing contractions in GDP. Now, anytime you're getting contractions in major data like that, you're kind of getting to a point where this is a lot more serious than just a correction in the markets. You know, a lot of analysts are saying, well, this is just a correction. You know, our figures are for 1450 or so in the S&P. I'm taking the other side of the bet. I really just don't see this as just a correction. I see this as kind of a larger theme building up in the markets. I mean, you wouldn't see so many countries entering into bear markets if this were just a simple correction. I think this is part of something much larger. So for me, buying into this risk-on move that we're seeing, I think this is very much temporary. See this as a brief risk-on correction, and then we're going to have another slew of data coming out that is going to show investors around the world that this is not just a risk-on move and it's going to carry over. It's really not going to carry over. It's going to provide further selling positions into the larger downtrend move. So if you're buying the Kiwi right now, what you're saying is you believe risk is back on. That's fine. If you want to take that view, maybe from a shorter standpoint. But if you're buying the Kiwi or buying the Australian dollar, from a longer-term trend view, what you're saying is that you think this is just a brief correction. I completely disagree with that, and I think this is just going to be a brief correction in the downtrend, and we're going to be heading down for the next leg, maybe this week or in the coming weeks. So for me, a sell position would look something like this. I would look to sell around the 84 level or the 85 level, and I'd be targeting maybe the 80 handle, a big round number that we recently have hit last week or the week before. So what I'm looking at in particular is a couple things here. Now I drew a couple things that I'm looking for here. These are just kind of simulated candles of kind of just what I'm looking at before I want to enter into a short position. Now from a candlestick point of view, I'm looking for a couple things. I'm looking for either a shooting star formation, or I'm looking for maybe a bearish engulfing to show me that it's about time to enter the trade. Now, anytime you get any candlestick formations like this, you know that price is either exhausting itself or the bears have overwhelmed the bulls. Now, I'll explain first the shooting star. This is sometimes called a pin bar, sometimes called a doji, just depends on the shape. But what you're looking at is you're just looking at price exhaustion, right? You're looking at exhaustion to the point where the upper wick is really high, but you actually end up closing negative for that candle. So maybe it would look something like this, where you have a candle and it shoots through maybe the 50% level, maybe the 61.8 level, but then closes back down. And what that's showing you is that price has hit a point where it's exhausted itself. Selling pressure has completely overwhelmed any bullish momentum you've had. That's one option that I'm looking for. That would be my technical signal to enter it in short. Another one might be looking for a kind of like an engulfing pattern, okay, which would be this big candle over here. Maybe we get some bullish pressure going upwards, and then we get some major bearish engulfing patterns showing up at key levels. Now you don't want to just take an engulfing pattern in anywhere. You want to take it at key levels, which are showing you that major selling pressure is occurring at confluence points. That would be my signal to enter short. So I'm looking for a couple things here. I'm looking for the shooting star formation, or maybe looking for bearish engulfing to show me that it's time to enter. Now, with all this put together, basically to summarize, my view is that we're just getting a short-term correction risk, and we're going to fall apart later this week or maybe in the coming weeks, and we're going to enter into that next level down in the markets. So that's about it for this week. Thank you for watching, and good luck trading this week.